Okay. Let's talk gold. You mentioned something that I think we need to dissect a little bit. You said gold is not leveraged enough, or there's not enough leverage in gold. Can you explain what you mean by that? Because everybody, like, I'm sure we'll get some comments below this video. It's like, oh, but the gold market is manipulated. So I'm curious, like, what you mean by that? And the one way you manipulate the gold market is through leverage and paper gold. So I'm curious what you mean by that.
First of all, let's be very clear. Everything is manipulated. what are we talking about here? Everything is manipulated.
There's my YouTube title, by the way.
I know, really, everything's, of course, it's manipulated. The Treasury is manipulating liquidity. The Fed is manipulating liquidity. They're manipulating algorithms by what they put in a statement that they're probably going through AI to filter as far to see what the reaction by the other algorithms are. Everything's being manipulated. Like, what, you think fair value for the S&P 500 is where it is now? That's not manipulation. So when I say there's not enough leverage or it's not no real leverage in gold, what I'm talking about is there's no over optimism, there's no overconfidence in gold. I don't see people excited about gold. I see a lot of people talk about Bitcoin 100K. I see random posts about live streams. Bitcoin reclaims 100K, and it's like, oh my god, what is going on? That people are like, this is like a casino that we're just creating content around. Like, nobody's talking like that for gold. When you start seeing, that type of stuff on X, and silliness around gold like you're seeing in the crypto space, then that means there's leverage. And that's when it's going to turn negatively.
No, I appreciate you clarifying that. No, we don't have our own fart coin in the gold space yet, so I'm not seeing that type of excitement.
I put out that post. I said, fart coin, the Fed will raise rates because of fart coin, and it's like, I'm actually serious about that because it shows you there's too much liquidity. There's too much stupid shit that's going out there. Pardon my language, which is ironic to say with Fartcoin. Just too much stupid stuff out there that people are just throwing money at. I'm not against gambling, but it's like when you have speculative fervor like this, it only happens when there's liquidity and too much of it.
Yeah, we've seen it with the NFTs. We've seen it with the bored monkey. And like, what did Justin Bieber pay for a sticker of a monkey or whatever it was? So, yeah, too much liquidity in the markets. One last topic I want to tackle with you here, Michael, is geopolitics and how you sort of factor that into your analysis and into your rules as well. You touched on the carry trade, so that's a bit of geopolicy or geopolitics in there. But I'm thinking also like what's happening in the Middle East. How is that sort of weighing on your rules-based system, and how do you factor that in?
I mean, first of all, it's a rules-based. You can't really factor in any of that stuff, and it's always an unknown. I don't know. It's not clear. I mean, yeah, maybe Trump is able to kind of figure out ways of calming some of these tensions, right? And in quotes, resolve Ukraine and Russia. In quotes, resolve Israel. And I don't know. I'm skeptical of all this stuff. I think in general we're in a dangerous world, a far more dangerous world than people want to admit. Because we're distracted by all the social media lights from all these screens we're looking at, while there are actual lights and bombs going off and people dying while we sit in our comfortable lives, and just disregard the horrors that are happening all over the place. I don't think Trump necessarily can change those dynamics. I think those risks keep getting higher and higher over time because this is what people do. Now, where that could manifest into markets is obviously around the price of oil, right? And yes, okay, oil, we have largely control of our destiny here in the U.S. because of how much oil is produced here. But that could still be a source of a sudden surprise, meaning an oil spike. And if that happens, that goes back to my reverse carry trade thesis because it was never about the yen. It was about yen, oil priced in yen, and that's sparking a whole bunch of other interrelated nasty movements. But we'll see. I don't think you can necessarily invest based on geopolitics, but you can size for it.
Now, that's a good point. Maybe it leads to my last question here, Michael, as well. If you had $1 million today to invest, like how would you allocate that money? And again, not financial advice or anything. I'm just trying to it's a nice wrap-up question because it summarizes what we discussed, I think. So I'm curious, how would you allocate $1 million right now, Michael?
I'd buy a series of gyms. I'd invest in a fasting education course, since I've done a lot of that. No, look, if I had $1 million, what would I do? If I had $1 million, I'd probably launch more funds. Now, which is not what other people want to hear, but Me saying that basically is implying I would think about putting money to work in things outside of the S&P 500. There will come a point, and I think we're probably close to it. And I've been actually very consistent on this narrative, this idea. I said this 2 years ago or 3 years ago. It's 2 years ago. I said I believe that AI mania, with hindsight, will mark the blow-off top for large cap dominance in terms of the global equity landscape. I've said that many times. And if you look at any chart that looks at top 10 stocks as a percentage of the S&P 500, which is largely tech names, relative to history, you're at basically, all-time highs in terms of how much those large cap tech names contribute to the performance of the index. I maintain that idea. We are in a concentration bubble.